Hi there, this is Mark Sebastian, founder of OptionPit.com, and this is our Option Pit video blog. Reminder, this is for educational purposes only. This is not to be construed as investment advice. Consult your financial advisor to check your own suitability and to make sure you understand what you're doing. So, what a day in the S&P. I can't believe this intraday range. I mean, look at this. We were kind of up all day. Then on the news, they absolutely tanked the market out of the Federal Reserve. Why? Because the Federal Reserve is confused, and they're still trying to figure out when that they might raise rates in December. It's not going to happen. The Federal Reserve is not going to raise rates until spring baseball. That is the soonest. It might even be the All-Star break before we see the Federal Reserve raise rates. And so then you can see market absolutely took off into the afternoon. The buy orders came in. People don't believe the Fed. They can talk as hawkish as they want. Nobody seems to believe them. All right. Now with that, if I add the volatility tick chart, watch this. Look at the movement. We'll just take a look at November. Look at the movement. Kind of around 12.5 all day, and then toward the end of the day, absolutely tanking. Now, you can see the VIX now down to 1430. All right, this is the lowest VIX level we've seen really in the last, 1430 is about as low as we've gotten. Sans October 23rd when we had that print down, but that's the low. That is, in fact, the low close since August. So markets are, decided that they don't really care what the Federal Reserve thinks. Nothing is going to be raising rates soon. With that, VIX Futures curve, super steep contangoed. One thing I'd point out, this 14 level has been kind of a floor in the market. I think we are going to see some hedging activity, especially with VVIX. I mean, take a look at this thing, especially with VVIX now at a level where it's back below 90. Another thing we have not seen since kind of early October. It's back below 90. I would be surprised if we don't see some hedging activity tomorrow in VIX and the VIX futures, even if the S&P is flat. I think we'll probably see a little bit of a back off. This was a bit of a sharp reaction, but that being said, I think bullish movement is going to make some sense. So what trades do I like? Well, in SPX, as I look at the overall market, I really like near-term broken wing butterflies. Something next weekish that lets me get long at, say, the 2100 strike. All right, and maybe sell the 2015s or 2020s, which would be the all-time high, put us right by the all-time high. So I bought the 2100s, and I sold one of these, and I sold 3 of the 2015s, and then bought 2 of the 2030s. That 1 by 3 by 2 could be done for probably a credit and makes some sense to me. Puts our P&L well below above the all-time high, which is kind of what I like to see in my trades, and a level that I think we'll back off of. Gets us short more volatility, but also short delta. So if volatility comes in, that would be a trade that would work out okay, would get longer delta, but if it turns around, I just keep the credit. Reminder, again, this was for educational purposes only. If you really want to learn about trading, try out our Option Pit credits and debits course. Go to optionpit.com/optionincome, and for $12 you can take a 45-minute course, teach you a lot of cool things on debit and credit spreads. You got questions, you can email me, mark@optionpit.com. You can call me 888-TRADE-01. Have a good day, folks.